All right. Forget the Lambos. We're talking about being wealthy, and wealth isn't about being flashy. It's really about freedom and being free, right? The freedom to wake up when you want, the freedom to do what you want, where you want, with who you want, uh, saying no without fear to things that are going to be distractions. And guess what? Bitcoin might just be one of the most powerful tools to getting that time freedom. All right. And so we're going to dive in. We're going to take a look at this. All right. So, what I want to do, we're going to start with a quote. And then we're going to build around that quote. And then we're going to use some examples of how we can achieve this freedom with Bitcoin. Right. So, here we go. There is no true freedom without time freedom. And there is no time freedom without financial freedom. So you need to have both, right? And let's use a few examples, right? You could be a billionaire, right? But if you don't have your health, and let's say you're in a coma, you don't have any time freedom because you really can't do anything, right? And you get all this money, you can't have no way to enjoy it, right? So yes, you have to have your health, but also you have to have the freedom and the time to go and enjoy these things. You could be a billionaire and stuck in corporate board meetings answering to investors and all this stuff, but are you really that free if you can't go where you want to go? I don't know. And that's what we're going to dig in today and really explore. So freedom can sometimes not be looked at as much as what people own in their possessions, but actually at their calendar. Can they go do what they want and have the freedom to get up and go on a vacation on a whim? There's these things that come with time freedom, but one of the ways that can get us there faster is having wealth that works in our favor, not against us. And we've been in a system that it's been working against us, okay? And so what we can do is we can take a look here at historically the purchasing power and currency in circulation. All right. And so, in order to have time freedom, you can have time freedom and be unemployed and not be able to do anything with that time. That's not being wealthy. You need to have both money to pay the bills and do the experiences that you want and the time to actually go out there and enjoy that. Right. And so, here's the system that we're in. You can see here, as in the red line, the more money that is printed, the less buying power that the dollar has. And this is a very clean look. I mean, anybody can look at this chart and say, yeah, on the red, the more they print, money goes down. That's not good, right? And that's the system that we're clearly in. And so you can see here, over time, the dollar has continued to lose its power. You trade energy for these dollars, and if you simply store them in dollars, you're going to lose buying power over time, so your energy is getting drained that whole time. Now, if we look at the comparison to Bitcoin, a house in 2016 would have cost $288,000. In 2020, it goes up. The house isn't worth more, the dollar just has less buying power. We're at $328,000. 2024, $434,000 is the median home price. Do you see the trend? It goes higher and higher and higher over time. In reverse, in 2016, it took 664 Bitcoin to buy a house. In 2020, it took 45. And in 2024, it took 6. So the more you operate in USD, in fiat, you have to work harder to make more money because your buying power is going down. With Bitcoin, the more Bitcoin you have, Bitcoin works in your favor where you need to spend less and less and less and less of it because the buying power actually goes up, right? And that's what can lead to that freedom, right? And so if we look here, here's another example. Now we're comparing the US dollar to Bitcoin. And here is the purchasing power of Bitcoin over time. You work hard to make the money. And if the money becomes less and less and less, buys you less and less stuff, you have to work harder and harder and harder. So it's this never-ending cycle. Bitcoin goes in the opposite direction. You buy some and it works for you, okay? It's working in your favor, so you have to put less energy in to get a same or better return. And here's the thing. People talk about Bitcoin being volatile. It absolutely is, and it absolutely is not. It's all about time horizons, okay? So let's do this. So right here, we're looking at the 4 years. So this is the average price or return on Bitcoin over 4 years. This is pretty steady. 4-year moving average right here in this orange. A little bit of volatility, but guess what? It just keeps grinding and working its way up if you are willing to hold for a longer period of time. And over 4 years, you just have more and more and more and more buying power over that time. Now, people can argue, yeah, well, Bitcoin is really volatile. The point, though, is the longer the time horizon you look at, if we're looking in weeks, we're looking in days, it is going to be volatile. If we look in years or decades, this is not volatile. It's up and to the right, okay? So let's take a look at a little bit of the different options we have to invest, okay? And so what we're going to do is we're going to go ahead and take a look at what the buying power is of $100 over time. Historically, there's been a 2.5% inflation rate, okay? So the buying power today is $100. In 5 years, you're at $88. So things aren't going to go down in price, they're just going to go up in that much price, and that's what you're going to get for the exact same product, right? Your buying power in 10 years is 77, 66, 29. In 100 years, you've lost almost all of your buying power. In just 10 years, 22%. In 50 years, 70% of your value disappears. In 100 years, you pretty much have nothing left, right? From a buying power standpoint. This is what's working against each and every one of us when it comes to financial independence and ultimately time freedom. If you have to put that much more energy and hours in to keep up with inflation, and 2.5% doesn't sound like a lot until you look at it year over year over year of that level of inflation, all of a sudden you've got to work a lot harder. So what are your options when it comes to investing? Because we can't just save these dollars, right? So what we did is we pulled up a chart and we took a look at what the returns would be for traditional assets, okay? So historically, right, if we're looking at what most people invest in, let's start with here, large cap, the S&P 500. That's probably the most common investment for most people. So let's start with a $10,000 investment, okay? Invested over 20 years, okay, turns into $67,000. That doesn't sound too bad, right? Gold has performed at 5%, so now that turns into 22. Bonds, 24, and then cash and T-bills. This is just historical numbers. You're at about 20 grand, okay? Now, you have to take into consideration inflation. So that was the nominal return over 20 years. Now we're going to look on the right-hand side at what the value of that money is with inflation, okay? So now your buying power, if you kept it in T-bills, is $12,000. So you had $10,000 that you waited 20 years to use, and you pretty much have the same amount of money. Barely keeping up, right? 15 grand, 16, 40. Now you start getting, and these are going to be more passive assets right here, right? Now you start to get into something that's another common one, all right? Buy and hold real estate. Let's say it's at 12%. Well, now you have 100 grand. Sounds good. Your buying power is 60 grand. Here is the hurdle rate. Here is the hurdle rate. At 36% return, and I pulled this from the last 4 years data, okay? 36. If you go back 10 years, it's a lot bigger of a number, but I want to be conservative here. And the compound annual growth is 36% for Bitcoin over the last 4 year span. So we're extrapolating that out. The nominal value of $10,000 invested today in 20 years at this type of return is 1.7 million. Now, could that return get degraded over time and you get less and less returns? Sure, but we're just operating with this data. The same could be true for any of these other assets, right? So we're just going to work on what the data says here. So now you've got $1 million. $10,000 invested today could get you $1 million in 20 years. Probably have to work a lot less hard with that million than that $12,000, right? So then we took a look at it and we said, okay, well, how much harder would somebody have to work to get the same type of returns? Okay, how much more would you need to invest in each asset class to match Bitcoin's 20-year returns? Bitcoin. There you go. That's the baseline. You have to invest 18 times more, okay, into buy and hold real estate, or I should say you need to work 18 times harder, okay, to earn the same amount of capital to get the same investment return as Bitcoin. Large cap stocks, most people's default, you need to work 26 times harder. Gold 64, bonds 70, T-bills 88 times harder. Now, there is no active management, right? Unlike stocks, you might hire a broker, maybe you just put it in index funds. That's a great way to do it, to simplify. Good. Bitcoin allows you to hodl. With real estate, no matter how passive you try to make it, there will still be tenants, there'll still be toilets, there'll still be taxes. And even if you're not self-managing, you've got to manage a property management team, right? There's headaches, there's decisions associated with that. In business is one of the few ways where I believe you can beat Bitcoin, but with a tremendous amount of more work and risk. If Bitcoin is going to do a 10 or 100x return in business, done correctly, with the right skill sets and team, I do believe you can get a better than a 10 or 100x return. Again, you don't get that return for starting a business and then sleeping and holding and doing nothing. That's the difference. Okay? So figure out the way to get the greatest return on your time. Whether that's a high-paying corporate job, whether that's starting your own business, or keeping on, and living below your means, the more Bitcoin you stack, the less energy gets wasted into the system through inflation. Okay? So, Bitcoin doesn't require day-to-day decisions. It's DCA and chill out, live your life. Okay? There's no physical maintenance, right? So there's no property taxes, no broken toilets, no storage costs like there could be with gold. There's no middlemen. You don't have brokers. You don't have tenants. You don't have banks. You don't have regulators. None of that. So, and it's borderless. Move across from country to country. Be fully autonomous. Have your time freedom. Go where you want, and those funds go with you, right? So not only do you not have to work as hard fighting inflation because Bitcoin is outrunning it dramatically, right? It's less complicated in the sense that there's not as much to manage. You literally just hodl. But that's the beauty of this whole thing, right? We all want the time freedom, and even if you created all these passive income streams, there could be headaches, there could be stress with that, but guess what? Over a 4-year time span, Bitcoin historically goes up. It's hands off, it's kind of mentally light load as well. This little meme here I think is very good. So you just accumulate Bitcoin and focus on your family, friends, and hobby. It's a peaceful time. Not only do you have to work less hard to achieve greater financial independence, but the mental load is less as well. You hodl, you DCA, you buy the dips, and you enjoy your life, right? So let's go out there, stack those sats, create the financial independence and the freedom. Let me know your thoughts on this and the whole creating the time independence. Is that truly wealth? Let me know your thoughts. Like and subscribe below. Thank you.